when we buy our homes and we buy our insurance policy from your company or from any other company, I would assume there is some mechanism in place in the policy that provides for increase in the replacement value. I mean, as the land value, it's not going to get destroyed, so we don't have to worry about the land. But if a house were to burn down and need to be rebuilt, you'd have to rebuild it in today's dollars, not dollars from 10 years ago. So just set this up for me and kind of give me a general understanding of how it typically works in insurance policies, homeowners insurance policies.
Cleve, you're absolutely right. So any home insurance policy is going to have what we would like to call an inflation protector in it. The dwelling coverage of the home is going to increase a little bit over time because of the standard inflationary coverage that we have year over year.
Okay.
The challenge we've got in the last 3 to 4 year market is the increase in value has outpaced what that standard inflationary protector would be in a home coverage. And this is our number one conversation we have with a homeowner at their renewal period. One of the questions they'll always ask, and I'm glad you brought it up there in the introductory piece to it, is they'll look at the dwelling coverage of their home and equate that to the appraised value of their property. And you know what we always like to try to remind them is this number is here for you to rebuild the dwelling. God forbid we have a total loss or a major loss at the home. This is to come in, clean up the debris, rebuild the structure as it was prior to the loss. Mm-hmm. So we don't want to make you overinsure your house based on what a market value is, because you can't insure that land because we're not replacing that land.
If you had a home that was worth $500,000 today, we might assume that the house was worth $350,000 or $360,000 3 years ago. So that's a big increase in the total value of the home. And I'm talking about the market value right now, not the replacement value. So
right.
Let's just say, though, that of that $500,000 today, $100,000 was given credit to the land, meaning the land's worth $100,000, and the improvements or the dwelling on the land were worth $400,000. So it could be that if it was only worth, let's say, $275,000 or $300,000, and let's say it has an inflationary index of 4 or 5% a year, it could be that it's insured for $300 and something thousand or $320,000, but it would cost $400,000 to replace it or even more.
Correct. No, absolutely. You'd be looking at a situation where the normal inflationary protector in the policy would have it in those low threes. Over history and time, it runs in that 3 to 5% range.
Okay.
Yeah. So that's the kind of the standard number. So using that math, we're in the low threes in a dwelling coverage there. But you've mentioned that the market value is increased, the land value where they're living is increased. So yeah, that's a situation where we want to run some updated numbers, look at what is happening, because it's appreciated because of the average cost of goods, the rising cost of labor. So when you have a claim, those are the figures you have to take into account. It's going to cost more to rebuild your house because of the labor and the goods. And how they typically lead on this, Cleve, is they'll say, well, the homes in my neighborhood are selling at $500,000.
Yes.
And my dwelling coverage is $315,000.
Right.
And so that's where we're allowed to sit down and we talk with them about the difference of what we need to insure versus what the makeup of that is land, versus also just a hot seller's market that we have right now that is generating a lot of this rising values.
Absolutely. How would the homeowner know that they were adequately insured?
So what Allstate and every other major carrier is going to do is they use a technology piece. Obviously, everything's technology based now. That we have. It's a replacement cost estimating tool where we're going to plug in the details, the finishes of the home, the square footage, the foundation type, if that basement's finished, things of that nature that are going to help us generate what a new replacement cost would be in this market.
Are there types of coverage that homeowners need to have on their home that you find some typically don't have?
Many of the things that we often recommend, because every home policy has its base coverages in terms of dwelling coverage, personal property, other structures, things that you'll find on any normal deck page, no matter who your carrier is. But there's a lot of what I always call a la carte items.
Yeah.
We always recommend to people based on the age of your dwelling. Do you have coverage for building codes? If your home is if codes have changed since your home was built, that may be something that would leave you a little bit exposed in a claim that would not be covered.